Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy, and we have another great episode from the Hong Kong tapes, interviews that I did with folks at Galaxy's headquarters in Asia, in Hong Kong, last month in September. This time I'm talking with Chris Yu from SignalPlus about the Bitcoin options market, the need for tooling to support advanced trading, and the future of on-chain structured products. It's a fascinating interview. Before we get to that, I need to remind you to refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's go now to our guest, Chris Yu, co-founder and CEO of SignalPlus. Chris, welcome to Galaxy Brains.
Thank you.
I was excited to talk with you. We met a few days ago. We're here in Galaxy's Hong Kong headquarters. SignalPlus is really advanced software for options traders that I guess you were saying is relatively common in traditional finance, but missing in crypto. What is it?
I would say it's really common in TradFi that every bank, every trading firm has their own system. But then it's very common that all the systems are built 30 years ago. As a new generation trader, we always want the software or the system to be more user-friendly, more efficient. But for the banks to change their system, it's almost impossible because the tech team has turnover every year. Newcomers will always feel it difficult to change the original codes of the system. And therefore, the system it's super accurate, super stable, but it's never really efficient and user-friendly. And crypto actually offers a good opportunity for us to do something that, it's commonly accepted by the traders, but then in better format. But then crypto doesn't have anything of that when we come to the market. Yeah.
Interesting. So instead of ripping out the bank software and trying to do it, you have an opportunity to start from scratch maybe then and build it fresh, right? I worked at Fidelity Investments for 12 years. I know how hard it can be to build new technology inside of a giant firm. So is that, but it also doesn't exist at all really in cryptos, right?
Exactly. So we started from that idea. So that comes to our first products to basically build a professional trader-based, trader-oriented trading software for risk management, for execution. But later on, we move on, try to build something that doesn't exist in TradFi either. We try to build something new for only crypto because crypto is 724 and a bit different from TradFi asset class as well.
So I like this. Very interesting. Options have grown huge. I don't have the data in front of me at the moment, but open interest on Deribit, for example, is maybe an order of magnitude higher than just a few years ago. So what is everyone doing now? If you're a big options trader or shop, you build your own tools? Is that they all have some rudimentary tools they've built to handle their risk and monitor? There's no one's selling this as software to them yet?
I think for the tool set, there are some players in the market, but we are also one of the earliest one. But the way that we operate the software or we sell the tools is actually slightly different from a traditional way of selling a SaaS system. We don't really charge the user. We don't really charge a fixed fee for the SaaS system. The way we look at this is actually very related to your first point about option volume being grow. When we come to the market, we think option market is literally too small compared to where the spot futures and perpetual is. But then in FX and equity, we have seen that growth. We have seen option as 1% of a spot trading or linear trading 15 years ago in FX, but then now it's almost at par. But then the same number in equity option is actually bigger than linear products. But right now, when we come to the market, the option is only 0.5% of the linear stuff. I think over the past few years, the option has grown 3-4 times. So right now we are 2 to 3% still, but still it's a very small number. That's also why we designed the software into a volume-based revenue. We don't want to anchor our revenue with the number of users. So let's say we charge each user $2,000 per month. like the Bloomberg. We don't want to do that anymore. So we want to offer like free service for the user. Whenever you trade through us, we actually want to get a commission or rebate from the exchange, so that we can capture the crypto option beta. Whenever the volume grows 100 times, our revenue can grow 100 times. Our user might not grow 100 times, as long as we have big users like you guys.
That makes sense. You're coming in. You're then you can ride the wave that you also help to build by maturing the market. Okay, so tell me before we go further. Tell me why you chose to leave traditional finance and get into crypto and then eventually build SignalPlus.
Well, I would say as a trader, you always try to trade the most volatile, or you always try to chase the volatility. At the bank, at the end of the day, after you become more experienced, you will always be a little bit conservative. You will always have to really consider a lot of politics in the big system. And then that all coming back, reflecting your trading decision-making process. And then you actually start to have some extra time because you actually can look at other stuff that you can make more of your own decision-making. That's where I started to look at crypto trading. So I started to trade my PA. I started to look at the market, but then I realized, oh, this is an asset class back in 2022 with the implied volatility at 120, which is amazing. So
I see. So you were attracted to the volatility as a trader. Crypto was very volatile, so you started trading it, and then I guess you realized you didn't have the tools you needed.
exactly. So I started to trade very small. Honestly, I didn't even know how to buy crypto asset. I actually asked my friend to a P2P to get some crypto asset as a collateral and put on Derby. I started to trade. I actually made like 15 times in the 1 month time. And then I started to take it more serious. To be honest, that 15 time largely because of I'm lucky. I'm actually highly leveraged. But after that, I start to look at a little bit more serious and I start to say, hey, how can I scale up? And when I try to scale up, I had to really guess a lot of scenarios and what kind of a circumstance, what's my game plan. I don't have the right tool. So I wish I had a tool that I had in my FX trading in Goldman and Morgan Stanley. But then I realized there's no such tool in the market. So I start to basically evaluate to set up a hedge fund in crypto option space, or to set up an infrastructure or software company or in crypto. I realized if I go to set up like a hedge fund, back then in 2021, if you are a crypto option focused fund, your AUM probably is less than 50 million. That's the capacity. If you try to run a hedge fund with AUM less than 50 million, it's not really that sexy to me.
It's not economical. Well, it could be, but it's small, right?
Yeah.
And so, what the market and the infrastructure couldn't support like a larger sized fund? Is that what you're saying?
Yes, I mean it's a little bit the chicken and egg because to build an option infrastructure or at least to build the tools, it's actually something pretty heavy. If you want to have a proper software or tools, not like Excel based, it probably takes you like around 10 to 20 people originally to build it for 1 to 2 years. But the landscape for trading firm in crypto is very different from TradFi. There are so many trading firms has 5 to 10 people. They used to be ranking top market maker exchange, and then if you do an interview with them, they tell you they only have 5 people. But then for this type of people, it's generally just impossible for them to build some in-house option system, and therefore they cannot really scale.
And they don't do options then at scale. I see. Because you do need like software tools and real-time risk management, and that's interesting. So okay, so instead of running one, you said you'll build software to help them run.
So once we started to identify we want to build the infrastructure, I started to look at why crypto option hasn't grown. What's the pinpoint? So I realized there are 3 pinpoints, which ended up to be our 3 products. The first one, as we just discussed, is a software for professional traders to scale up their trades. So that one is like quite straightforward. The second one is we realized crypto is 724. You don't have enough electronic market maker in the market, especially if extreme case happens. You look at Deribit order book. I mean, on a daily basis, it's perfect. It's liquidity is pretty enough, and market is pretty deep as well. But when market is in an extreme case, nobody is throwing a price. It tells you that we don't have enough market maker. I mean, then I started to do some homework. In In the FX market, you have 50 to 100 banks making market for this. But then in crypto, I mean, there are a lot of market makers, but then most of them are more like a OTC market maker or blockchain. Electronic market maker, I think the time when we come to the market is maybe less than 7, which is generally not enough. So the second product we try to build is a market making infra.
I see. So make it easier to enter as an electronic market maker in the option space.
Exactly.
And then the third product?
The third product is to try to build a taker flow. So we think about the market. Okay, we have professional user. We enable more market makers, and then what we need is the taker flow. In traditional finance, again, right, like this is something that we have seen it in the past 20 years, which has happened in FX and equity market. The biggest taker flow is structured products, right? Because we had the market making infra, we make customization to that. We can actually make this customized automation tool for structured products. But then this part, we basically serve the different user. We serve the issuers differently from the market making infra. The structured product thing, we only sell to the biggest issuers, which are mainly the exchange right now.
For our audience who may not know, explain what a structured product is, right? And how options fit into that.
Sure. Structured product, I mean, probably we don't need to understand the backend how the product is structured out. But then you can see this is basically a basket of option that helps you to boost your yield from treasury 5% to 15 to 20% yield. This is very common in traditional finance, and it become the most common way of yield enhancement instrument. But at the end of the day, it all become option taker flows to the option desk at an investment bank. So I would say to like prime broker user or to a retail user, a structured product is more like a yield enhanced products. It can be principal protected or not, but at the end of the day, it wrap up option so that the user can easily understand the payout without need to look at the details of what options in that.
Yeah, it's a very generalized term,
Exactly.
structured product, but it is basically, right, and correct me if this summary is wrong, it's basically like, well, there might be a variety of strategies embedded inside. What we're saying is you put in X dollars and it is predicted to yield this much over X amount of time or not, or protect you this much or whatever, but it's to get that, the product itself is performing option strategies that you're sort of saving the user from having to hire a whole options desk to figure out to run multiple strategies, combine them into some predictable.
Exactly.
It's like an ETF almost
It
for
generally
options. Like, it's a wrapper.
Exactly. It always
Yeah.
set up some scenarios for the user. It will tell you if
Right.
the BTC is always 50K above, you get 40% APY, something like
Right,
that.
right,
But
right,
then if it goes below 50K, you might lose some principal.
Right, whatever it is, and you
Exactly.
can structure them in almost.
Exactly.
I think it makes sense why the sell side likes this, because you can hear the desire from the client, and then just put your smart options people on how do we design a strategy that could get that, and then what are the where do we have to, what is the risk in that? If I say I want 5.1%, it's going to be a much different structured product than if I say I'm looking for 40%, right? And with different risk and whatever, but you can package them as like individually sellable products.
Exactly. I mean, that's the exactly right way of think about the structured product, because in traditional finance, how this product designed is actually dependent on the end user. The end user are generally more of the insurance companies or the real money investors in the market. Taking the insurance company as example, a lot of them has been selling the life insurance like 20 years ago at a cost of 7 to 8% when the interest rate was high. But then that becomes the cost of the insurance company. That means their target return should be at least 8% so that they can break even. So that's how investment bank design the products. But now in crypto, it's so easy to design a product that actually have a return more than 8%, which is why I'm very bullish on this market, because with ETF approved, and actually just this week, SEC also approved like BTC option on ETF to be traded. So once we have that, we can already start to see structured product on crypto with the implied volatility so high. Then this real money will love the products, and then there will be huge demand, which is taker flow.
That's interesting. So again, why you were chasing volatility as a trader, there's things you can do with that vol, right? I wanted to ask too, what about you had said to me that you were there's maybe we don't call it a product. There's a project that you've incubated around structured products. What is that?
So we realize there are a bit of a barriers about distribution the structured product. As I mentioned, right now the biggest issue is always the exchange. But then the exchange, the way that they try to design the products, is not always the way that the user would want. And then one thing that we like crypto is, I mean, or blockchain is it really can do something on the blockchain and in a decentralized way. And after FTX happened, I think the market is actually missing some central counterparty that can take the counterparty risk that everyone can take as a counterparty, where the blockchain naturally is actually the counterparty everyone can trust, right? Because it's transparent. It's actually efficient for settlement, because think about the way that we do settlement and in the ops department in the bank, it's always manual. I need to send down the fixing at 4 p.m. and sometimes we mess up. But then if everything is right in the smart contract, it's actually quite straightforward. So we actually incubate a project called SOFA that actually settles. The first step only settles structured product. Second step will settle loan deposit and also derivatives later. But the first step is we allow user to deposit the asset on chain. Everything is in smart contract, and the smart contract is audited, but then your asset is safe basically. And then you can buy a structured product, and everything is written in a smart contract, automatically settle and plug in market makers. Yeah.
Does it need like on-chain options, or do other parties come in from off-chain, like as not traditional like crypto market maker? Like, does it rely on only on-chain DeFi applications to go inside the structured product?
Not really. I mean, at the very beginning, of course, if you don't pick up the products that has a higher capital efficiency, then that will make the market maker or the user capital efficiency super low. But out of all the products, there are actually some products that can be high capital efficiency for both buyer and seller. So we pick up those products, we let the blockchain to settle that. It's not dependent on the centralized, it's not dependent on the decentralized DeFi option space, because there's no liquidity there. The market maker, because it's high capital efficiency, the market maker can use small collateral to be a market maker for the structured products using SOFA protocol, but at the same time, they can use Deribit for hedging.
I see. So it's really about the settlement of the products in the first place, not the execution.
It's clearing and settlement.
Yeah, not the execution of the constituent strategies that are in there. That's very interesting. We don't have that in crypto yet. To be honest, it's called SOFA. I haven't heard. I'm not the expert on DeFi, but I haven't heard of structured products on chain.
Yeah, it has been, actually the data has been doing pretty well. The SOFA project has been live since June. It has a TVL. It has a TVL like 20-30 million immediately right after its launch. It's actually ranking like number 2, number 3 on DeFi Llama in terms of option space already. Honestly, we incubated, it's naturally growing by itself. So far, the data has actually shows on chain there are actively users try to deploy. We actually see like very big asset managers coming to us say, hey, do you guys want to design this product? I'm okay to deploy like 30 million TVL. Think about that. This already become an area where you can, once you have the smart contract ready, you can use that as a clearing and settlement, because everything is on smart contract. And then we can bridge this up. We can basically go back to this asset manager and say, hey, now I can have the products. We already have a market maker. For example, we take Galaxy into this space as well. Then you guys can be the market maker. They can be the buyer. Everything settled on chain. The asset is on the smart contract. So this is, one of the potential way where structured product can take off. But taking the DeFi part aside, all the regulators has been actively trying to push the structured product forward as well, including Hong Kong and Singapore. We start to see some initiatives already from the regulators, and also, of course, from the market participants who always want to push this forward. But then I do believe even the attitude are positive, but the process might be slow. So the first step might be still the on-chain part.
That's very interesting. So maybe stepping back just broadly, You're in the option space. I mean, we've sort of talked a little bit about like how whether trading professional trading desks or options focused hedge funds may use it, but in general, like where is the demand? You've tweaked my interest about say traditional insurers needing yield, and wow, there's a lot of volatility here. But in general, what types of strategies are people doing in options today? What types of options traders are there, right? I mean, it's not all prop shop or hedge funds, right? Who else is doing that you see, like, or what types of strategies are they doing?
Actually, so besides all the hedge fund players who are using option to do some leverage or trading vol as asset class, we start to actually see more and more players to do hedging and b yield enhancement, exactly starting from second half year this year. So I think this year could be the turning point for option market to explosively grow into next year. So that's why, I mean, I mentioned that the implied vol was 120 when I come to the market. Currently, the implied vol of Bitcoin is around 56 already.
Right. It's much lower. Yeah.
It's much lower. It tells you that more participants for sure. But why more participants means vol lower? It's actually because BTC market become deeper, liquidity become better, and the underlying asset is less volatile as a fundamental. But then at the other hand is with more participants in option space, generally people will try to sell vol to do the yield enhancement.
Right.
So what we are missing here in the market is we start to see some hedgers say, hey, I have 10,000 Bitcoin, I want to buy some put to protect. So we start to have that flows. We didn't see a lot like 2 years ago. I mean, I almost see zero before.
Yeah.
But this part I think can grow bigger with all these passive holders come to place. The only reason they haven't come in to this place is BTC doesn't have yield. So a very a natural way of thinking this is if I have, let's say BTC have a deposit rate of 5%, just like a fiat, okay? If I have a 5% yield, I allocate some of my asset for this real money investors to Bitcoin, then I'm willing to spend 1% as a hedge because the market is moving. So I spend 1% premium to buy puts, and then I get 4% yield, and I'm passively holding this as an allocation. So that's the way it works. Right now, BTC doesn't have yield. So where the yield come from? Structured products.
Interesting.
So it's a step by step. Once the structured product is widely adopted, then you have yield. Once you have yield, you want to hedge.
It's very interesting. And yes, I think selling vol is, so this is primarily people selling calls, right? Like collecting premium. That's yield enhancement, as you said, right? And I can see this is one of the big things, I think, with the ETF options. And there's already a big options market, but I bet there are a lot of probably, like you said, real money investors who prefer to trade CFTC regulated options or options that are their normal brokerage and prime brokerage can actually touch, right? That should enhance it. So that should over time also contribute to Bitcoin realized vol coming down, right? So is that essential for the growth of the asset class in your mind, or Bitcoin as an asset?
I think that's very natural for an asset class to grow bigger. So because we have actually seen that in an FX market as well. So it used to be like a 10 to 20 implied vol. Right now it's only 3 to 5. That's actually because more participants, market deeper, liquidity become better. So I would say the current progress or development in crypto option has been pretty healthy. Everything has been showing that more participant, the market is more liquid and deeper, and more healthier structure.
I think we're going to go some crazy places with this. This feels like much stronger footing, much more maturity than the 21, 22 era, much deeper institutional products. And I think just the option story is really just getting started. It seems like you guys are going to be on the sort of forefront of helping to push it forward.
Yeah, we are in very good position and very committed position. Try to grow the volume together through real products, professional user, maker, and taker. At the same time, we are very committed to make educational stuff to users. basically two perspective. One is whoever are trading crypto actively doesn't understand option. We have all the materials to tell them what is option. And if you are big users, we can also find some good market maker like you guys to quote them a price when they want to participate. And second is if you used to trade equity options in U.S. stock. I mean, it's actually quite popular to trade option in U.S. stock right now.
Yeah.
So these users, naturally, they can come to crypto because the implied vol is super high. Just the same reason as when I move over.
It's very interesting. I really appreciate you telling us about it, Chris. Chris Yu, co-founder of SignalPlus and contributor to SOFA, the on-chain structured product project, which I'm going to check out. Chris, thank you so much.
Thank you. Thank you for having me here.
That's it for this edition of the Hong Kong Tapes. Thanks to our guest, Chris Yu from SignalPlus, and we will catch you on the next episode. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.